Hey, I'm Ryan Mallory, and it is time for a stock market crash update. Where's the bounce? Man, I was thinking last week we'd get the bounce. We did not get a bounce. We started to get a bounce maybe late Friday afternoon, but that's about it. Now, the market did something that it has only done twice, going all the way back to 1958. I could have probably gone back further to do a little bit more research, but after 1958, it's like, what does it really matter at this point? But since 1958, the S&P 500 has only gone down 7 weeks or more twice. Just twice. First one was in January of 2001. The second was in May of 1970. If you take the Dow, it's been down 8 straight weeks. That's something that hasn't happened since 1923. Heck, it didn't even happen during the Great Depression. And yet here we are, 8 straight weeks on the Dow. And I don't really care about the Dow. The Dow's a worthless index, but nonetheless, it's still a novel stat if you think about it. I mean, we're seeing things that we didn't even see during the Great Depression. So where's this bounce? Are we going to get it? Are we really going to go down for an 8th straight week on the S&P 500 and the Nasdaq and a 9th for the Dow? I think every week here on out is going to be very, very difficult for the market to sustain the same momentum to the downside without a bounce that we have seen in the previous 7 weeks. So yes, I talked about in my previous videos where I thought, okay, I'm pretty sure we're going to get a bounce here. And we didn't. So now we're going into the new week. I still hold on to that belief we're going to get one. I tried to play the bounce this week. It didn't work. In fact, it didn't start working until Friday afternoon when I put on a trade late in the afternoon, expecting that Friday afternoon bounce into options expiration, and got it. And we'll see how it works out next week. Maybe the market reverses course yet again going into the new week. If so, that's what the stop loss is for. That's what the risk management is for. And people think that you shouldn't have a bad trade or you shouldn't have a losing trade. Guys, you're going to have losing trades if you stay in this industry for very long. The key comes down to how do you manage those losing trades? Are you managing the profits? Are you playing out the trades before you get in? Are you managing the risk? And if so, then you can focus on those aspects of the trade and let the profits take care of themselves. And for the year, the S&P 500 is down 18%. The Nasdaq's down 27% and the Russell's down 21%. That means the Nasdaq was down just about 30% before late Friday's bounce. And it's kind of a crazy time to be living in, considering that these are things that are happening that no one's ever seen before. And for the sell-offs in general, yes, I've been through a few major sell-offs, including 2000 and 2008, as well as 2020 and 2018. But for many people on Wall Street, they have never seen a legit, true bear market. And it's going to be very telling. How do they respond to things that they have never experienced before? Because it's been so long since we had a massive sell-off like what we saw in 2008 and 2000. But I also sensed among traders that there was a sense of defeat among so many this past week. You could tell that they were just ready to throw in the towel. There was a sense of desperation. However, you're not seeing massive amounts of panic selling. Instead, the one characteristic that has defined this market is the lack of panic selling. Instead of seeing massive sell-offs where within a 5-minute bar, you might see like 30 or 40 points to the downside on the S&P 500. You're just seeing like 4 and 5 point steady decreases hour after hour. It just doesn't seem to stop. But over this past week, you might have noticed there's been a little bit of a change in the market behavior in the sense that the volume that has accompanied the sell-offs in the past was not there this past week. So in this video, we're going to go over the S&P 500, we're going to go over the Nasdaq, we're going to go over the VIX. I'm going to provide my technical analysis for each and what do I expect it to do in the coming week. But first, make sure you pound that like button and subscribe to this channel. Make sure you get the notifications so that when I'm doing live streams or doing videos like this, you're being notified. Plus, check out my YouTube membership by clicking the join button down below so that you can get all my stock market research sent to you each and every day. With that being said, let's go ahead and get to these charts. The S&P 500 chart. Yes, we still have that massive head and shoulders pattern at work. We have the left shoulder, we have the head, and then we have the right shoulder. It's confirmed. There's no disputing that. We have this declining channel that I think has been just incredibly important over the past 5 months. And here we're seeing another test of this declining channel. Intraday, it tried to break below this declining channel, the bottom level support. However, it put together a huge bounce into the close, saving the day and allowing the S&P 500 to finish the day in the green. So massive support level, you can see on 3 prior occasions, we have bounced and bounced very hard off of this level. And here we are again. We bounced and we bounced again. So the big question is, can we take a run back up to this 408 level? And if we can break out, then you have a little bit of a double bottom that is formed here. And yes, you might say, well, Ryan, this candle here is actually below the previous low. And that's true. However, it didn't close below it. And I consider that to be part of a defining feature of a double bottom. Yes, the intraday action may go below it, but it barely went below it and it closed above the previous lows from the first bottom. If we can get that momentum to go into next week, then the next obstacle becomes, can it break 408? And if it can break 408, then you set up the potential for a run back up to this upper channel band. But that's not in the here now. That's weeks or months away if that were to happen. Right now, the S&P 500 just really needs to focus on trying to string together an actual rally that holds throughout the week's end. I've mentioned before that the volume is lightening up. You can see here over the past week or so, the selling has been much lighter than what we've seen before. Here, you have some really heavy selling days. But the same level and the same intensity was not seen this past week. So that should give the bulls some hope that the selling power is drying up, that we could see a short covering rally very similar to what we saw late Friday afternoon continue into the week ahead. On the Qs, we're looking at a pretty decent solid downtrend that has consistently rejected price over the past month and a half. If we get a bounce here, there's still a lot of room for it to run before it actually hits this declining trend line. Yes, it's steep, but a move from 288 to 306 could offer the prospects of a nice 4 to 6% rally in the Nasdaq, which would be a good dead cat bounce. But if it breaks through it, and all it needs to do, it has a double bottom very similar to what we were just talking about in SPY. If you can confirm this double bottom pattern by breaking back above this 306 level, then you set up the opportunity for a much bigger run that could challenge this declining upper channel band. And remember, just like with the S&P 500, this channel band has offered up a lot of support in the past and created some incredible bounce opportunities, just as we saw back in January and in February of this past year. We saw a minor attempt here in May, but it did not hold into this week. So here's our second attempt to create that double bottom and to push back above the 306 level on the Qs and possibly challenge this declining channel band in the weeks and months ahead. Because even in a bear market, regardless of how bearish it is, there's usually going to be some very hard counter market rallies to the upside. So it wouldn't be surprising this year alone. We've already had 1 month that finished in the green, but if we saw another 3 or 4 that finished in the green before the end of the year, because remember, I am actually bearish on this market overall, but I also realize too, trying to stay short or get short in the market at this particular time, no matter what the sentiment is a low reward, high risk trade. So that's something that I want to just completely avoid as a trader. And so I want to focus my attention on where's the most reward for the least amount of risk. At this point in time, I would say that it's going to be much more difficult for the shorts to continue to press those shorts, sending the market much lower to the same extent that we saw back in April and early May, and that there's more opportunity to the upside for a nice, strong, short covering rally. And check out the VIX, man. This chart here we've been talking about a lot over the past few months, and particularly with how strong the resistance has been for this chart. But look at this. Resistance going all the way back to September of 2020. And each time it has tested, yes, sometimes it'll break above it, but most of the times it just rejects this resistance level on a regular basis. And here again, we're seeing where price got right near that resistance level on the daily chart and it rejected price once again. So I do think that this 33, 34 level on the VIX is very difficult to break through it, and it launches a lot of counter market rallies when it's tested, and I would expect the same to happen here in the very near future. Look, I'm not a big fan of wanting to call bottoms in the market, and right now this market is very treacherous, loaded with plenty of booby traps and many ways to lose capital. But I'm also trading very small right now because I also realize that even if I do think that a market's going to bottom like I thought last week and it doesn't, I don't want to lose big. There's plenty of volatility in this market to where I don't have to apply a lot of capital in order to extract some profits from this market. Instead, I want to be able to stay very nimble, mainly in cash. And if the market wants to continue to rally, then I will add more positions. But as long as it doesn't really want to show us that just yet, and we're 7 weeks into this sell-off, I'm going to stay very light with my new long positions. And if I'm wrong, that's what the stops are for. You take the stops and you move on to the next trade and you live to trade another day. But right now, there's a lot of traders blowing up their accounts. I get the emails, I see them almost every day of people who are saying, Ryan, I wish I would have listened to you. I wish I would have traded a little bit more nimble and not gone so heavy to the long side or to the short side. Because in the end, it doesn't matter if you're right about market direction. It only matters how did you manage the risk. And if you didn't manage the risk, it's going to only take one time for it to teach you a major lesson that you will never forget. So keep your eyes focused on the risk in this market, not on the potential profits. If you're wrong on a trade, take the medicine. Let the stop loss that you set in place before you ever got into trade, or at least you should be doing that, let that work and then move on to the next trade. It's okay to be wrong. I've been wrong many times and I'll be wrong many times into the future. That's just part of trading. So if you enjoyed this video, make sure to like and subscribe and get those notifications so that you know each and every time that I post a video. Plus, click the join button down below so that you can get all my stock market research each and every day. Let me know in the comments. What is your plans for this week? Do you really think it's going to go down to 8th week? I don't. But like last week, I was wrong, and market doesn't care what I think. Market only does what it wants to do, and we have to respond accordingly. So tell me in the comments what you think, and I'd love to chat it up with you guys. Thank you, and God bless.